Welcome back to Bazaar Morning Call. This morning we have plenty of cues to talk about, and the SGX Nifty is making sure it's a party on the Lal Street, at least for the bulls. But let's talk straight about let's get straight to numbers now. Axis Bank came out with a very good set of numbers. In fact, a lot of brokerages have raised their target price on the stock post earnings. Abhishek is here to tell us how the numbers looked. Abhishek, over to you.
The P&L is very strong. However, there are some flaws in the results. So to begin with P&L, the net interest margin is at 7.5-year high of about 4.26%. Best return ratios that you are seeing in last 30 quarters, both on ROA as well as on ROE front. The asset quality, gross NPA ratio and net NPA ratio, they are one of the best in last 7-8 years. Restructured book as well as watch list, they have reduced a lot. So the stress on the balance sheet is actually on the lower side. However, on the flip side, the deposit growth has moderated now to about 9.9% YOY. So for incremental loan growth to happen, they need a lot of deposits, especially on the retail side. Talking about the retail side, the retail loan growth is actually on the lower side at just 1.4% quarter on quarter. This compares to peers in the industry having a growth rate of more than 4.5% sequentially. So P&L, both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, Mangalam joins us to tell us about Concor. Mangalam, not too impressed with those numbers?
Well, not too impressed by those numbers. You know, if I just take a look at their revenues, it was up around 3.5%. The EBITDA actually declined by 7%. You'd wonder, why is it that the net profit then grew by about 3.5%? That's because of other income that jumped by almost 90%. We already know the volumes for the company. They had updated it, pre the results itself. Overall volumes grew by about 5%. But Exim, the mainstay of the company, saw a revenue decline of 4.5%. Margins largely stable at 23.3%. The land license fee, however, has been largely in line. The big trigger for Container Corp is not numbers, but now privatization.
Okay, thanks a lot for that. Privatization is the next big trigger for Concor, so we'll keep our eye out on that. But let's hop across to Rima now. She's tracking some numbers as well. Tata Com is on her radar. Rima, good morning.
Hi, good morning. Tata Communications numbers are looking good. Revenue growth has picked up to 8.2% on a year-on-year basis. And the big positive is their data revenues are showing you a double-digit growth for the second consecutive quarter. The data revenues were impacted about a year ago on account of slower decision-making, supply-side constraints, but now those appear to have eased, and for the last 2 quarters, data revenues are up over 11%. The miss in the numbers is the decline in margins. Margins down 210 basis points on a year-on-year basis. Another internal we should take note of is that while the debt has come down on a quarter-on-quarter basis by 130 crore, you are seeing a jump in the company's interest costs. So this rising interest rate has been ballooning the company's finance costs, and that is a monitorable that we will be tracking. But on the whole, I'm going to go with green because of the pickup that we are seeing in their top line and the strength in their data business. Back to you.
All right, got that. Rima, thanks for that. Well, let's hop across to Ekta for a daily dose of Pharma. Ekta, you're tracking Gland and Syngene?
Yes, absolutely. Both of them on the back of numbers. I'll start with Gland. Remember, it was the third consecutive quarter for revenue and a profit decline. The company says the challenging business environment, the supply chain challenges continue to impact the business. Revenue was down 12%. Street was estimating a flat performance this time. Core markets, which is 70% of their business, was down 11% year-on-year. So there was a decline in the core markets, which took place this quarter as well. Profit down 15%. Street was anticipating a decline of 3%. Positives this quarter, margins at 30.9% versus 32.8% year-on-year, but in line with expectations despite a profit decline and better than 28% in the previous quarter. Net cash remains strong at over 3,800 odd crores. Stock is down over 60% from its 52-week high. And hence, a lot of the brokerages are now possibly getting incrementally positive, saying that maybe the worst is behind. And hence, I'll go with the green, but it's difficult to say with Gland because there are a lot of variables with this particular company. Now in Syngene, revenue was up 23%, profit was up around 5% odd. The street was anticipating a higher growth, but remember, revenue is up 20% plus for the second consecutive quarter, and the profit growth is in line with expectations. Margins have improved on a Q-on-Q basis, and company has maintained its guidance, which they had increased in July 2022 for FY23 as well. Going with a mild red simply because it's already trading at around 51 times, and also the revenue is probably a tad below what the street was expecting.
Okay, thanks a lot for that. Well, let's move on. Abhishek is tracking Poonawalla FinCorp. Abhishek, good morning.
Morning, Sonia. So it's a strong set of numbers coming in from Poonawalla Fincorp, especially on the disbursements and AUM growth. Disbursements are up nearly 75% YOY and about 9.7% sequentially. AUM growth is very healthy at about 27.6% YOY and 5.8% sequentially. The standalone net interest margin at 10.7% has actually expanded both YOY and quarter-on-quarter. And asset quality has also improved, a decline of 8 basis points on the gross NPA ratio. One interesting part that I noticed in the result is that the restructured book of Q2 FY23 is now mentioned as 246 crore. Remember that in the previous quarter, it was mentioned as 619 crore. And in the quarter gone by, they have sold down their housing portfolio. So 60% of the restructured book has been sold. Let's await further clarity from the management. PNL, the calculation shows that NII growth is at 44% plus YOY and about 8.5% sequentially, while PAT growth is about 78.5% YOY and close to 12% sequentially. Back to you.
Okay, thanks for that, Abhishek. Well, let's hop across to Sonal. She's joining in and she's got quite a few stocks on our radar. Sonal.
Good morning, Nigel. Let me start with Zensar Technologies. Weak set of numbers. It was a CC revenue, constant currency revenue decline of 5.3%. Dollar revenue was down 5.9%. They also had EBITDA coming in at higher than estimates at 11.3% versus 8.5%. And profits also grew, but there was a big miss as far as the revenues are concerned. So going with red here. Supreme Petrochem, it improved on a lower base on a sequential basis. Last quarter numbers were really weak, so there has been an improvement. Revenues were down 4%. But EBITDA went up by 50%, margins were up 300 basis points, and profits were up 48%. Shoppers Stop, strong set of numbers, best ever EBITDA growth led by the festive season as well. Revenues grew 19%, there was an EBITDA growth of 16%. Margins, however, saw some decline this time around, and profits were also down because in the base quarter there was an exceptional gain as well. The average selling price grew by 23%, and the beauty category reported a growth of 18%. That is sales of around 230 crore rupees. Moving on to KEA Industries, good set of numbers, revenue growth of 14%, EBITDA was up 15%, margins came in flat on a YOY basis, but profits were up 28%, so green on that one is expected.
All right, thanks a lot for that. So here's a quick recap then of our top stocks with positive news flow. There's Axis Bank, Tata Communications, Gland Pharma, Poonawalla Fincorp, Supreme Petrochem, Shoppers Stop and KEI Industries. While stocks with negative news flow, there's Concor, Syngene and Zensar Technology. But let's quickly get an update on what's happening in the world of crude. In fact, in commodities generally, Manisha Gupta is here for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Crude it is because we are trading at $82.88.5 for both the varieties. So strong gain up overnight. We're trading at a 2-month highs for both of these varieties. And this is as China's traffic at the week-long holidays bodes well for fuel consumption. And those numbers are coming in strong. Also, the European Union and G7 will cap the prices of Russian refined products from 5th of Feb. And that's what the markets are factoring in. European Union will also embargo Russian oil by sea from 5th of Feb. So, with 10 days remaining to that, markets are expecting or anticipating some reaction from that always. IEA and OPEC already have said that they are very bullish on 2023 demand outlook. So whichever way that you look, there is support continuing in case of crude prices, which shows in prices. And good gains is what we continue to see in metals. You have gold prices trading at a 9-month highs, copper prices trading almost at a 10-month highs right now, and strong buying in zinc and aluminum, where you have seen 1 to 1.5% of gain coming overnight.
All right, Manisha, thanks very much. So far it's been it's slowly creeped up, right? It's to $87, $88. And at some point it will come into sharp focus once again, especially if it crosses that 90 to a dollar mark. That's a big single most important macro variable for the economy. Yeah, we'll take a quick break here, more on commodities later. But we come back with Deepan Mehta of Elixir Equities. We'll talk specific stocks, his views on Axis Bank and a whole lot of IT names which have been doing well. Stay with us. Later, we will also connect with Kamal Singhal of Arvind Smart Spaces. They reported their third quarter earnings, so commentary on the back of that coming up as well.